please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Take a look at how the Asian markets are faring. Remember, on Friday's trading session, the Dow snapped an 8-day losing streak and ended about 100 points higher. However, the Asian markets down in early trade. Investors attempted to shake off jitters about trade tensions between the United States and China. However, the Chinese markets are something we will be watching out for. Some strengthening on the dollar yen, which is adding further pressure to the Nikkei. But the Chinese markets, the Hang Seng and the Shanghai index, is the one that we'll be watching out for later in the show today, as China has lowered some bank reserve requirement ratio, or RRR as we know it, by 50 basis points. This move will help support qualified debt to equity swap programs and help small businesses in financing. So those indices are some things that we will be watching out for. The Korean markets down about 1/3%, similar fate that we see across this, the Taiwanese as well as the Straits indices. The SGX Nifty, remember, now on Friday we saw a sharp spurt in the last hour of trade where the Nifty conquered that 800 mark, 10,800 mark. We closed at 10,820. However, for starters, across the weakness, because of the weakness that we're seeing across the Asian screens, the SGX Nifty indicates a cut of about 50 points.
Okay, so those were the cues coming from Asia, but important cues coming from the world of commodities as well. Oil prices slip in trade after rising on Friday as OPEC agrees to a modest increase in output from the next month. Now, the agreement came on Friday after a week of tense negotiations amid calls from major consumers to help reduce the price of crude and avoid a supply shortage. CNBC's Brian Sullivan reports on the same.
All right, on that note, let's also listen to what Russia's Energy Minister Alexander Novak and UAE Energy Minister had to say about OPEC's decision.
Okay, let's shift focus to the US markets then. The Wall Street ended mixed on Friday. Dow jumped over 100 points, snapping 8-day losing streak, while the S&P 500 gained around 0.2%, with energy, materials and telecommunications outperforming, while Nasdaq closed around 0.3% lower as tech shares fell. CNBC's Eric Chemi gets us a wrap of all the action on Wall Street.
For CNBC TV18, I'm Eric Chemi. U.S. stocks finishing the week mixed, the Dow adding 119 points, snapping an 8-day losing streak and posting its best day in 2 weeks. The S&P finished up 5 and the Nasdaq losing 20. U.S. crude oil soaring nearly 5% to $69 a barrel after OPEC agrees to a modest output increase. That's meant to offset losses in production from countries like Venezuela, Libya, and Iran. The market has been anxious about a potential supply shortage as a result of U.S. sanctions on Iran. Meanwhile, a new tariff threat from President Trump and a new battlefront in a looming trade war. Today, the president warning he'll slap European automobiles with a stiff 20% tariff unless the EU removes trade barriers currently in place on U.S. cars shipped to Europe. German automakers have already said they support removing the tariffs. And keeping with trade and tariffs, the EU placing tariffs on U.S. imports that cover everything from bourbon to motorcycles. These tariffs are a response to duties the Trump administration has put on European steel and aluminum, and it covers roughly $3.5 billion in goods. No surprise, shares of Harley-Davidson lower today. That's the action from the U.S. market. Back to you in Mumbai.
All right, so that was how the U.S. markets fared. On that note, let's hear out some opinion coming in from Credit Suisse, PIMCO and BlackRock on the road ahead for the U.S. markets, as well as the global growth outlook in the backdrop of escalating trade tensions. All right, so let's go across the Atlantic. Sharp gains seen in the European indices after OPEC secures a deal on oil production. Remember, the FTSE as well as the French index ended over 1.5%, nearly 1.5% for both those indices. The German index, while it gained about 0.5%, remember, optically it looks like it underperformed. That's primarily because the automakers in Germany did not do very well. So the automakers dragged that index, but still ended up higher by about 0.5%. Sharper gains were seen across the peripheral indices. If you take a look at the Spanish index as well as the FTSE MIB Italian index, both of them posting gains of about 1%. The Swiss index was also higher by about 2%, so 1.85% thereabouts gains seen there. What also gained after a spate of underperformance, long spate of underperformance, were the emerging market indices. So about 1% seen in terms of gains for both the Brazilian as well as the Russian index, which posted gains of about 1.3%.
Okay, on to some developments in Turkey then. Tayyip Erdogan has been re-elected as Turkey's president, while an alliance led by his ruling party also won a majority in the parliament. Now remember, over 59 million people voted on Sunday, and the vote ushers in a powerful new executive presidency in line with constitutional changes approved in a referendum last year. However, the opposition is still not conceding. The Turkish lira, however, firms against the dollar.
Right then, with that, let's slip into a short break, come back, all the cues and news you need to know for trade this morning.
Welcome back. You're watching Power Breakfast on CNBC TV18. Well, back home on the Lal Street, the market surged in the second half on Friday to end with significant gains. Remember, the Nifty regained the 10,800 mark and ended with gains of 0.75%. The Sensex rallied more than 250 points as well. Banks actually led the rally in the last hour to end with gains of more than 1%. Remember, we saw a pullback of around 400 points from the day's low and the Bank Nifty ending in the green. The mid-caps, on the other hand, ended with modest gains of around 0.5%. But how the cues stacked up for today? Banglam, tell us, how does the picture look like?
Well, you know, you said at the opening start that we saw sharp gains in the second half. Let's narrow it down a little more. It was actually the last 30-35 minutes where we saw a sharp spurt, and that was mirroring something that we saw in the previous trading session, where for the most part of the day the Nifty did nothing, and then we ended with mild cuts. And as against that, on Friday, for the most part of the day, the Nifty did nothing, and we saw this sharp spurt in the last hour of trade. The gains were led by all heavyweights, be it the HDFC twins, Bajaj Finance twins, ITC, as well as Sun Pharma, which ended higher by about 4% as well. But, you know, while we conquered that 10,800 mark, remember, for the last few weeks, the Nifty has been trading in that range of 10,650 to 10,900. So with that, in that regard, it's important to watch that that 10,893 mark, which is this series high, the June series high. More important, primarily because one, it is the expiry week, and secondly, if we do break above that range, the FII long exposure in index futures is just 37%, which makes a sharp case for short covering, further short covering. We'll be watching out for Brent crude and how our markets take that, because remember, while OPEC did agree to a minor rise in production, ministers have agreed in principle to bring output compliance back to 100%. The street would have liked a lot more clarity in terms of the exact amount of overproduction, the timelines, as well as other details. So if you remember, on Friday's trading session, in Friday's trading session, we saw the oil prices range between, leading up to this meeting, the oil prices were ranging between $73 to about $75. And post this announcement, the oil prices actually did spike. So that is something we'll have to watch out for, how our markets take that. The Dow, that's opened in snapped an 8-day rally. The Asian markets have opened lower. The SGX Nifty indicates a muted start. So in that regard, it'll be very interesting to see where does the support lie. The first port of call will be the 20-day moving average, 10,739. Maximum open interest in terms of puts is at 10,700. So that is something we'll be watching out for. And 50-day moving average of 10,675 if the markets were to go to those levels. But at the higher level, keep watching out for the 10,893 mark, which is the series high.
Okay, that were the important levels to watch out for. But Manglam, in terms of stocks, there were a lot of news flow over the weekend, right from ICICI Bank, Tata Motors, etc. Which other stocks you're watching out for?
Absolutely. You know, you spoke about ICICI Bank. So let's talk about ICICI Bank itself. You know, post markets on Friday, the company informed the exchanges that they've got an anonymous complaint in March, which alleged issues in the financial statements. Over and above that, there were news reports that some American investors not too happy with the current management. So we'll watch out for how that stock reacts in today's trading session. IDBI Bank. Now, government sources have told CNBC TV18, remember, there was chatter that they will be selling stake to LIC, but now we found out that LIC is actually looking to buy majority government stake in IDBI Bank. So that is something I'll be watching out for. Also, because remember, the stock has entered F&O ban on Friday's trading session. This is the expiry week, so any sort of moves will be fairly volatile. Tata Motors, we've been talking about the JLR Analyst Day, and post that, Nomura has written the company has announced a comprehensive turnaround plan for JLR, and on the back of which Nomura has a buy buy rating with a target of 495 on Tata Motors. Infosys, they had the annual general meeting, so some commentary coming in from Nandan Nilekani. He says that he is convinced that there is no better time than now for them to grow strategically. Let's see how that goes, especially given IT stocks did do well over the last 1 year. Symphony signed an agreement to purchase 95% stake in Climate Technologies Australia. I believe, Anisha, you'll be knowing much more about that. We'll throw some light on that too. Sandhar Technologies, they've signed a joint venture with Vetron Electronics Taiwan to supply future technology to the Indian automotive OEMs. So we'll have to watch out for details out there, but the street will take this positively. Phoenix Mills, they've acquired an under construction retail development plan in Indore for 234 crore rupees. Kaya, the CFO, Mr. Naveen Duggal, has resigned, so we need to know the reasons and what exactly led to that. KPR Mills, they plan to enter branded retail business, so again, we need some more clarity. Strategically, a positive move. Kovai Medical, their auditor has resigned. Why, we do not know, but this is something that the street will watch out for. And Biocon, finally, their sterile drug product facility has received an establishment inspection report, or EIR as we know it, from the US FDA.
Okay, Mangalam, thank you so much for getting us that list. But remember, Mangalam alluded to the reports that Life Insurance Corporation seeks government's approval to buy a controlling stake in IDBI Bank. We'll get you more details on that story after this very short break. Welcome back. Well, on to the big headline from the banking space then. The government seems to be desperately looking for a solution for IDBI Bank. CNBC TV18 learns from sources that the government is considering selling a significant stake in the bank to Life Insurance Corporation, or LIC as we know it. And post the completion of this deal, LIC will hold 51% stake in the bank. Sapna Das is here with more details on that. Sapna, what do we understand so far as this deal goes?
This story has been doing the rounds now for quite some time, and a very broad sense that we have been given is the fact that probably post-acquisition or rather post-deal, LIC should hold, may hold 51% stake in IDBI Bank. So that's the first big indication that we have got. Now, in terms, how much is to be sold, who is sitting at how much, those are also matters under consideration, but 51% is what LIC should be holding in IDBI Bank if the deal actually goes through. That's a clear indication, because then this will give LIC probably clear ownership rights as well. We also understand that kind of, cleaning up the NPLs, or rather taking charge of IDBI Bank's NPLs immediately. The third aspect that is also being, flagged off is the fact that this could basically, give a new life to IDBI Bank in the sense like a behemoth, because you have a big giant like LIC taking control. So there will be some synergies of scale. We really don't know the exact nature of those synergies, but this is another point that is being flagged off. We need to keep this in mind. The fourth we understand is, of course, regarding that 15% investment cap and, IRDA's queries on that front, the regulator, we have been given a sense that probably a reapproval is being taken. Also keeping that particular aspect in mind, there could be some other queries as well that the insurance regulator could have raised. So probably the proposal has gone back already, or will be going back to the LIC board, and we'll see how it goes. The sense that we had been given was that probably 2 to 3 weeks, you could hear some kind of announcement, but some quarters also indicating that it could be earlier than that. So it's a bit of a, 50-50 as of now. But a clear sense coming from the government that, yes, they are active on this front. Now, the second thing that we need to keep in mind probably, or this is something that a lot of people have already raised the question, possibly conflict of interest, because LIC also holds substantial stake in other banks, not just Corporation Bank, or even IDBI Bank for that matter. Anyway, that is going the deal right now. But like State Bank of India, OBC, Punjab and Sindh Bank, SBI, so once LIC becomes a bank, I mean, that's the impression that we have been given if this deal goes through, then what happens to the other shareholding that it holds in the other public sector banks? That could be one issue that may be raised. The second, of course, is that in terms of other compliances, regulatory approvals coming in, we really don't know what will be the situation on that front. The comfort for the government probably is the fact that, this could be a government-to-government transaction, like, say from Government of India shareholding to LIC buying out. So to that extent, I suppose the objections or whatever, the queries that may be raised are easier to handle probably, or, limited to that extent. But we have to really see how it really goes. So this is what we're given to understand. Just have to keep our eyes and ears open as to how this development now proceeds. A clear indication from the government at least. So one question of conflict of interest that I have already raised, that may be one of the issues. There could be a couple of others. The other comfort, of course, for the government is that this is not under the Bank Nationalization Act. IDBI is under the Companies Act. So to that extent, I don't think too many amendments are required. But there was also an IDBI Bank Repeal Act that happened a couple of years ago when the FI had been turned into a bank. So there could be something on that front, some queries that had been, some parliamentary assurance that had been given that, the government will continue to be the majority stakeholder. Probably that point also may be raised, if at all. So this is what we are given to understand. In principle, a very clear indication coming in that the deal is on, but in what shape, how, when, and, what happens to all these approvals, queries, that's still a matter of time.
Okay, Sapna, thank you so much for getting us that comprehensive detail on the matter. In fact, to take a 360-degree view on this matter, we also talked to a whole host of experts. Let's listen into what they had to say regarding this prospective deal.
It's a big principal change. Now, what will happen is that IDBI will now become, in some sense, a private bank with more than 50% out of government control. There are regulatory hurdles to be clear, but I don't think that should be a problem given the state of affairs of the banks in this public sector banks in this country. I don't think that should be a problem. I think that, as we go along, LIC will dilute its stake. Maybe they'll take on 51%, but there'll be a calendar by which LIC will be diluting its stake.
The core issue at hand is NPA. We're talking about 28% of NPAs in the bank, and we're talking about a balance sheet size of almost about 250,000 crores. Yeah. So we're talking about almost 62,000 crores worth of NPAs to be provided for. Now, we're talking about only the transaction. We're just talking about the fact that equity will be sold by the government to LIC. LIC will buy that equity and become a majority shareholder. But we aren't really talking about the value restoration or where does that capital. After LIC picks up that 51%, and I assume that it will be at fair valuation with proper due diligence under which, let's say, at least these NPAs are recognized. Then in that case, there is a burden that LIC will have to carry, in terms of funding that bank or provide, so that at least there is adequate capital with the bank.
The two motivations, in my view, which could be driving the government to do this. One motivation could be that they say, I give it to LIC, LIC is the transitory holder of the equity, and they disinvest, which is possible. The second is when government gets money from LIC, they again reinvest into bank to capitalize it. No, there could be only one of these two options which government wants to use this method. And I think it's a smart move. Let us appreciate that this investment is not an easy thing. And if government wants to use LIC as a transitory holder, then let it be so.
Okay, a lot of facets really to consider as far as that deal goes. Keep an eye out on IDBI Bank today. Remember, on Friday, that one closed around 2% higher. But on that note, let's slip into a quick break. Up next, we'll get you highlights of all that took place at Infosys 37th Annual General Meeting. Details on the other side.